Hi traders, this is Brad Gilbert from Traders for Traders. Now, what I wanted to do is just explain to you what the risk on, risk off sentiment is and how it impacts various currencies and instruments. Now, the whole risk on, risk off scenario was really came about by sort of media outlets, CNBC, the newspapers, all the tabloids, all these sorts of things. During the global financial crisis, they were trying to make it simple for people to understand what was happening. So when it came to risk off or risk on, what they were talking about is generally what's happening in the equity markets. And that's where the most sensitive point was around that global financial crisis. Now, this risk on, risk off sort of sentiment that they use is still in existence today. And it's a generalized way for them to sort of just give you an overview of what's going on. Okay, now let me explain to you what it impacts and what it involves, and then you'll get a very good understanding of why they just say risk on or risk off, and that should mean to you a number of different things across a number of different pairs. Okay, so first of all, the US equity market is the epicenter of all equity markets. Whatever happens in the US equities, okay, especially around geopolitical events, will be replicated in the Asian market, and that'll be replicated in the European market. Okay, now generally what you can see across those situations, obviously if there's individual events, say in Asia, Australia, Japan, or New Zealand for that matter, then you may see some sort of change there. But generally the result of the US equities will be replicated in the following day in the Asian and European markets. Okay, so if US equities are off or in the red, okay, that would be referred to as risk off. Okay, if the US equities are positive, well, then that would be risk on. Now, what does that mean for us across the board here? So now one of the key things is, generally around geopolitical events as well, you'll see equity markets are very nervous. Okay, they're at record highs, say in the US or in most places for that matter. And there's a lot of retail money tied up in that. So it has implications. If it starts to fall, you can start to see a bit of a panic run, and that has, problems for cash and people's investments and all sorts of things. So basically risk off. Let me just start with risk off. So if equities are coming off, right, this is, as I said, usually around geopolitical events, you will see a run to the safe havens generally, okay, the yen and the Swiss. All right, so the yen and the Swiss rally. And what also with risk off is you generally see the commodity currencies, or even commodities for that matter, come off. So you'll see the Aussie, Kiwi, and CAD currencies drop. All right, so it's a bit of a quick sort of thing, thinking. So when you got risk off, you should be thinking straight away, okay, yen's appreciated, the Swiss is up as well, Aussie, Kiwi, and CAD have fallen. Okay, and that's the general profile. So when you come back to looking at markets that where risk is, risk is on, well, then you would expect the same thing to occur. Okay, the US, talking about the yen, not the US appreciating. When dollar yen goes down, okay, risk off, expect the Aussie to fall, Kiwi to fall, and actually dollar CAD to rally, okay, because the US dollar is the base there. And that's the general way a risk off situation works. Now, once again, if I just come back and just delete those arrows, come back in and just show you what happens on a risk on situation. They will sell the yen. So you would expect dollar yen to rally, Kiwi to rally, Aussie to rally, and dollar CAD to fall, right? Generally around those specific events, when this is happening, and it's the major focus, generally speaking, outside of local events, sterling and euro will pretty much track sideways. They're not even sort of really caught up in this risk on, risk off situation. Okay, it's more the peripheral commodity-based currencies, which are, not as probably robust as, say, the euro or sterling. And then that's just generally the way it goes. All right. Now, what you can do is, and this is where a major focus is. Now, the US session itself around the risk on, risk off situations when there are major releases. Say if Trump comes out with something a little bit crazy during the North American session, well, what you will see is the major currencies move: Aussie, Kiwi, CAD in particular, and dollar yen, or and dollar Swiss for that matter as well. Sorry. So that's the major thing. But if something happens in the Asian session, for instance, right, then you can expect a significant move in the yen crosses. Now, let me just on, right, you're selling yen. You should generally see, in particular, Aussie yen go through the roof because you've got the yen side of it as well as the Aussie side. Kiwi yen also. CAD yen, well, obviously they're going to be buying CAD, okay? So you would expect that to rally as well. But generally speaking, when the risk on situation is, you generally see all these yen crosses all take off. Obviously, you've got dollar yen there going as well. So you could be looking very closely at the yen crosses. They're a great bunch, or I call them the Asian majors. They're a great bunch of currency pairs to be trading, especially when this risk on, risk off scenario is in play. Okay. Now, once again, we're looking again, if it's risk off, okay, and what we're looking for is really nice setups. And in this situation, we sort of have a good situation. The Syrian, the US, UK, and the French have sort of bombed Syria over the weekend. One situation that that does create is a bit of a risk off situation, even though it hasn't really followed through. But what you're looking for is good technical setups. So we've got setups here on most of the yen crosses, and this is where you would expect most trading activity, particularly be done in Asia, but also across the board, because the yen crosses do throw up really good situations. So risk off, you would be looking to sell Aussie yen, Kiwi yen, dollar yen, and CAD yen, and you're probably also looking closely at euro yen and sterling yen for that matter. Now, generally speaking, I don't really run in and just get in at any sort of levels. If I'm looking for a risk-off situation, I'm looking at the yen crosses, I'm usually looking to get in below the cloud or the support trend line, or both, the Ichimoku strategy there. So you can see how easy it is to get involved on these situations. Now, this obviously set up here at the moment, a risk-off, a heavy risk-off profile, and that means a significant move down in US equities, say like 1%, 2%. It'll be all over the media, and you can be sure as hell that these yen crosses will be moving lower, okay? Dollar yen also. So just bear that in mind as you go through the various sessions, how it all sort of comes into play, all right? Going up or down. Now, once again, make sure you do focus on, say, the US equities to get a core basic understanding of which way the equity markets are going. Then you're looking for the follow through here in the Asian session, and once again in the European session. So that's an easy way to work out risk on, risk off, and what currency pairs it impacts. And that should make your trading a little bit easier when you do come back to looking at the news, and they are talking risk on, risk off. Well, automatically you can actually just get your Reuters Zenith up, or TradeView, or whatever that might be. Check out what's happening on the US equities, and that'll determine whether it's risk on or risk off. All right. Hope that's helped you out. If you still have questions, jump in the Trade Zone or send us an email. I'd be happy to answer your questions around that risk on, risk off sentiment. Cheerio.